So you want to trade crypto like a pro, but maybe without the whole, spending years learning the ins and outs of the market? Well, that's exactly the promise of Binance copy trading. Today, we're going to dive deep into how it works, the incredible potential rewards, and maybe most importantly, the big time risks you absolutely need to know about. We've all been there, right? Staring at those crazy charts, feeling that mix of excitement and total confusion. Copy trading is pitched as a kind of shortcut, a way to tap directly into an expert's brain. It sounds great on paper, but how does it really work under the hood? Okay, first things first. Before we get into the nuts and bolts, let's just establish what we're even talking about here. What exactly is copy trading? The core idea is actually super straightforward. It lets you, the copy trader, automatically mimic every single move made by an experienced investor, who we call the lead trader. When they buy, you buy. When they sell, you sell. It all happens at the exact same time. Here's a good way to think about it. Imagine you've got this superstar trader in your contacts, but instead of just calling them for tips, your trading account is literally linked to theirs. It's pretty much the ultimate hands-off way to leverage someone else's expertise. Okay, so that's the big idea. But what's actually happening in the background? What are the mechanics that make this whole thing tick? Let's get into it. It all comes down to two main players in this game. On one side, you've got the lead trader. This is the experienced person making all the calls. And what's in it for them? Well, they get a slice of the profits from everyone copying them. Makes sense, right? And then there's you, the copy trader. Your job is to put up the funds, and then, well, the system pretty much handles the rest. And when we say automated, we mean really automated. Honestly, your biggest task is all up front. You got to do the homework, pick a trader you feel good about, and decide how much you're willing to put in. After that, you hit go, and the platform takes the wheel, making sure your portfolio is a perfect mirror of the lead traders. All right, that's enough of the how it works stuff. Let's get down to brass tacks. How would you actually go about setting this up and getting started? Let's walk through it. It really boils down to just three simple steps. Step one, you've got to find your lead trader. You'll browse through all these different portfolios, and don't worry, we'll talk about what to look for in a sec. Step two, set your rules. This is super important. You decide your budget and set up your safety nets, like a stop loss. Then, step three, you just click copy. And that's it. The system takes over. Now listen up, because this part is probably the most important thing we'll talk about. It is so easy to just see a huge ROI and get stars in your eyes. Don't do that. Dig deeper. Look at their profit and loss history for consistency. And please, please, please look at the max drawdown. This number is huge. If it says 50%, that means at some point their portfolio is down by half. That tells you everything about the kind of risk they take and the kind of losses you might have to stomach. Okay, so we've seen the shiny, exciting side of things. But you know the deal. With any kind of investing, there are always two sides to the coin. So let's get real about the risks versus the rewards. And look, the appeal is undeniable, right? You see a number like this, a massive return on investment, and your eyes just light up. It's easy to start dreaming. And let's be clear, the potential to make some serious gains by following a really sharp trader, it is absolutely there. But, and this is a big but, for every incredible high, there is a potential for a devastating low. A number like this represents a massive drawdown. It's a brutal reminder that if your chosen trader has a bad week or just makes one wrong move, it's your money that's on the line, right along with theirs. So let's just lay it all out, side by side. On the plus side, you get instant access to expert strategies, the chance for some passive income. And hey, you might even learn a thing or two just by watching. But the cons, they are just as real. Remember, what a trader did in the past is no guarantee of what they'll do tomorrow. The crypto market is a roller coaster, and at the end of the day, you're putting your financial fate in someone else's hands. So, after weighing the good and the bad, we come to the million-dollar question. Is this actually a good idea for you? Look, before you go anywhere near that copy button, you gotta have a little heart-to-heart with yourself. Be honest. How much risk can you really handle? Could you sleep at night if your investment drops by 30, 40, 50%? What are you even trying to achieve here? Are you swinging for the fences or just looking for steady growth? Only you know the answers, and those answers will tell you if this is the right tool for the job. Seriously, if there is one single thing you take away from all this, let it be this. Copy trading is not a get-rich-quick scheme. It is not a magic money machine. It is a tool. A powerful one, for sure. But like any powerful tool,
it requires your respect. It demands research, a clear-eyed view of the risks, and a very, very careful choice of who you decide to follow.
So in the end, it really just boils down to this. Copy trading offers you a clear path to follow an expert. But whether that's the right path for you, well, that's a decision that puts you and only you in the driver's seat.